let's zoom in on Oracle now, because it is surging after giving that robust forecast for its cloud infrastructure business, expecting cloud infrastructure revenue to grow 77% this fiscal year. Joining me now is Jackson Ader, KeyBank Capital Markets Managing Director and Equity Research Analyst, and Anurag Rana, Bloomberg Intelligence Analyst. Guys, it's great to see you. Thanks for being here.
Thanks for having us.
Jackson, I want to start with you because, again, the size of a company like Oracle, having a move like this is fairly unusual to hear the size of forecasts that we got from Oracle as well. Is this sort of an NVIDIA moment for Oracle?
An NVIDIA moment for Oracle. Not sure about an NVIDIA moment for Oracle, but I do think that we need to put not just the stock movement into perspective, but also the actual contractual fundamentals into perspective. Yeah, it's up 40%. That's a ton. It's adding hundreds of billions of dollars of market cap in a single day. But they booked in the last 90 days, or I guess, the 90 days ended last quarter, about 10% more than they had booked in business over the previous 4 full fiscal years. So it is a big stock movement, but it was also a massive bookings quarter, the likes that we have not seen, not just from Oracle, but from any other software vendors.
I guess that's what I mean in terms of it being an NVIDIA moment. In other words, this is a company that's been around for a long time. We all know the name Oracle, but to see it put up these kinds of forecast numbers, as you point out, in terms of the backlog, in terms of the bookings, for a business that is pretty well known and understood, at least we thought, is surprising, right? So Anurag, how are you thinking about this? And did it feel like it came out of left field when we knew they were building this business?
Yeah, we knew they were building this business, but to get this size of an order so early on, I think that is really impressive, largely because there are so many companies out there that don't want to do it in-house. In fact, they don't have the capital to do it in-house. So they are looking for hyperscale cloud providers to help them out. We're not seeing that same backlog growing for Amazon, for example, but Oracle is getting the same chips as, one would argue some of the neo clouds are at this point. So they are in the business of renting out their GPUs, bare metal computing, and I think that's really where a lot of the traction is for people who want to train their models or they want to host their AI applications.
And I guess I want to get to that a little bit in terms of the competition here. Obviously, it's a very competitive field. There's a lot of demand for this type of compute and this type of infrastructure. Jackson, why is Oracle proving itself to be competitive here, versus some of those other names that we watch within the hyperscalers?
I think there are 2 reasons for this. Number one is a relentless focus on performance, and performance, just a fancy word for speed, and speed in the cloud means lower costs. So I think Larry said on the call last night, if not last night on some other earnings calls, that if they are twice as fast, that means they are half the cost of their competitors. And so this relentless focus on performance is certainly a competitive advantage. The other thing is, you mentioned, Oracle's 50 years old, but their Oracle Cloud Infrastructure, the OCI business, is not 50 years old.
Right.
So this business, and specifically the business that they are building, focusing on GPUs and artificial intelligence training and inference, they are a relatively new competitor. And so in this case, they almost have the benefit of being a disruptor, whereas their competitors, like Microsoft or Amazon or Google, they have this, what I call Cloud 1.0, or a CPU-based cloud offering that they also have to manage. And Oracle is basically allowed to go all in on GPUs and AI in a way that their competitors just can't.
And to such an extent, Anurag, I saw a note that you all put out this morning where you posited that Oracle's book of business here could actually end up being larger than Google's?
It's possible down the road, but that's again several years out. You can't take Google's cloud for granted. Frankly, they have extremely high capabilities with their TPUs, as well as a massive, install base of applications. So, but at the end of the day, this is going to be whoever gains more market share over the next several years. There is no shortage of demand right now. The big question is, do you have the capital to expand data centers at a pace that can keep up with the next competitor? And who's going to get more NVIDIA chips right now? I think there's a lot of, you could say, fight going on those fronts.
And Anurag, when you hear that Safra Catz forecast, where they talk about the cloud infrastructure revenue up 77% this year to 18 billion, and then she talks about $32 billion next year, and then 73 billion, and then 144 billion. Do those numbers sound credible and realistically achievable to you?
No, it's possible. At the end of the day, if OpenAI keeps on spending that level of money over the next 5 years, it is possible. However, a lot depends on what is the size of, training funding going on the overall space for the next several years. There is a chance that, it's possible that we may not see that level of funding. But as of now, where we are standing, we don't see any sign of slowdown in AI infrastructure demand. Look at the results from CoreWeave or Microsoft. I mean, there is absolutely no shortage at this point.
Jackson, and I want to pick up on that point because, we keep sort of going through these AI sentiment mini cycles, if you will, right? Especially when you're talking about different industries, software key among them, right? Where I think the market has really gone back and forth questioning the utility and monetization opportunity of AI for software companies. So do you think that this is going to be a sustainable, something that's going to benefit Oracle over the longer run?
I do think that this is something that's going to benefit Oracle in the longer run. If we think about the forecast that they put out over the next 4 or 5 years, I mean, remember that the bookings or the remaining performance obligation, that's contracted. Now, contracts can always be amended, but it's not as if they are putting these forecasts out without the backlog sitting on just off their balance sheet is what I would say. So that gives you a little bit of comfort in what they're actually forecasting. Now, in terms of the headwinds that potentially come from artificial intelligence, those headwinds are expected to be felt by application companies. Oracle is in an interesting position, similar to Microsoft, where yes, they are a cloud infrastructure provider and should benefit from the building and inference of AI models, but they also might be under threat from the application side if AI were to collapse the software application market into almost onto itself. But Oracle has been pretty straightforward about, look, we are going to develop AI and agents and embed them into our applications, and we expect our applications to be enhanced by AI, and our products are going to be better than our competitors. And so our application business, as well as our cloud infrastructure business, should benefit from this AI wave.
Overall tech trade, what you're seeing, and maybe just any takeaways you have from that report, a company of that size coming out and essentially rewriting an entire one of its business lines. And this kind of market cap move puts it into an entirely different stratosphere in terms of what its peer group is basically overnight.
Thanks, Miles. It's great to be here on this rainy morning here in New York City. Oracle just blew away expectations, much better numbers than Visible Alpha consensus on its outlook, particularly for the cloud infrastructure business. Cloud infrastructure business going out a couple of years was looking for closer to $90 billion. The company outpaced that by over 50%. So I think, when we look at that sort of outlook and the visibility that the company management gave, it provided a very clear line of sight in terms of the valuation and the sort of growth we can start to expect. And that growth is clearly what is getting priced into the valuation this morning.
Melissa, I'm curious if there's just a thought that you have looking at, again, a company the size of Oracle with the established customer base that it has, coming out with that sort of outlook for one of its key business lines. If there are other, companies you're thinking about, like maybe this company is yet to say X about its business, or if there's maybe a broader sentiment indicator, from your position, looking at tech specifically around like this opportunity for companies to still say, hey, we haven't hockey sticked yet on our AI business, like how you were processing a move like this. Because again, a 30% rally in a company that was, worth hundreds of billions a day ago, just a day ago, is not the thing you normally see in financial markets.
Indeed. And, there are two components to this. One is they are the leading multi-cloud provider. So they have a platform that enables organizations to leverage different cloud providers. And that's an unusual service. No one else is really doing that the way that they are. And the second thing is they have been very well positioned on the sovereign side for a while now. And they're not just bringing AI to companies, they're bringing AI to countries. And I think that capability as well, and the way that their cloud services and this multi-cloud offering is really approaching that is also a competitive advantage. Now, in terms of, like other spin-offs, let's see how this could go. One interesting aspect of this coming later in the year could potentially be Dell. Dell disappointed this quarter, and their guidance for Q3 was kind of a bit below expectations, but going into Q4, things could start to heat up for them, and that could be an interesting one with their AI servers.